Hey, Doc, welcome back to Wealth Mavericks. If you've listened to this podcast for any length of time, you've heard us talking a lot about tax planning, asset protection, and building wealth, along with, of course, the mindset shifts you have to start making in order to start saving on taxes and building what we call the business of you. But today, I want to go back to the very first step in our process, the thing that comes before any of the planning or the tax savings. So when we first meet with you as a prospective member, there is one number we want to help you understand, and we call it your cash flow recovery number. And if you haven't had a meeting with us yet, you probably don't even know what that is. So I'm going to walk you through it. You'll need a piece of paper, or you can just take out your phone and use the calculator there. But to figure this out, there are just two numbers that we need to know. The first is, how much are you making per year? What is your total household income from all sources? And then the second number is, how much do you spend per month to live the life you want to live? If you don't know exactly, which many people don't, do your best to ballpark it. What exactly or how much is going out per month? You include mortgage, bills, travel, groceries, shopping, everything. What does it actually cost to fund the lifestyle you're living? Now multiply that by 12 and you have your annual spending. So now that you have those two numbers, subtract the annual spending from your annual income. And that difference is what we call your cash flow recovery number. And as I always tell people when I'm walking them through this, I say, now obviously you don't have all those dollars because a large portion of them are going to taxes. And this is the number that you are taking as income that you don't actually need to live the life you want to live. And you're paying the highest amount of taxes on those dollars. Now, if we were on a meeting, I would have our cash flow recovery calculator up and it would show the marginal tax brackets. So you can see that because of this marginal tax system, it takes a bigger and bigger cut out of your dollars as your income grows. So if you're earning over $400,000, every dollar beyond that is taxed at 32%. You go beyond $500,000, it's 35%. And if you go above 750, every dollar above that is taxed at 37%. And that doesn't even include state taxes. So for some of our docs who live in places like California or New York, it's 10 to 12% in taxes on top of that. So here's why this number is so important. That gap between what you earn and what you spend is the money that's available for tax planning and wealth building. Now, right now, you are, maxing out your retirement, but then you're getting your paycheck and you're investing the rest or saving the rest using what's left over after the tax man has gotten his share. So basically, you're trying to build wealth with the scraps. So something we hear very often is like, I feel like it's just hard to get ahead, or I thought I'd be further ahead by now. But when you're paying 35 cents of every dollar, it slows you down. So imagine if those same dollars could be leveraged and put to work before they went to the tax man's hands. That's the entire philosophy behind proactive tax planning. We believe you should be paying taxes on the money you're spending, not on every dollar you're earning. You shouldn't be penalized as you become more and more successful. And the greater the gap between what you earn and what you spend, the greater the opportunity you have to legally lower your taxes. So that is why we always start with this number, because we can't help everyone. If you are earning $1 million, but you're spending $1 million, there's really not much you can do to save on taxes. But if you earn $450,000, but you only spend $120,000, there's a lot of opportunity there. So once we know the gap, we know the size of the opportunity. And of course, I want to be clear, it isn't a promise that every dollar in that gap becomes tax-free. That's not how tax planning works. And we've talked before about how some things are black and white, but there is a lot of gray as well. But it does tell us what we have to start with. And it tells us how much income there is to protect by using the right structures and strategies. So that's why this is always step one. And if you've never calculated this for yourself before, do it now. And then keep that number, keep that piece of paper, because that is only step one in our process. Based on that number, you can get a rough idea of what we could help you save on taxes. So if your cash flow recovery number is, say, $300,000, you're earning $7,000, you're spending $4,000, so you have $300,000 left over, and you currently pay an effective rate of 30%, you can roughly put your estimate at $90,000 in tax savings. But again, it's only the first step. So once you see that potential and understand the concept, that's where you take the next step, which is actually looking at your last tax return. And then you get it to us, you let us analyze it, and then we can give you a very precise estimate based on your numbers of the impact we could have with our planning. But here's why I'm doing this episode today. For the first time ever, you don't have to meet with us or go through our official discovery process to get that information. We have been working hard to create an online cash flow recovery calculator where we will walk you through your tax return and show you what numbers to fill in where to get a really precise estimate of your tax savings. And then we're going to keep going and we're going to tell you how we do it as well. We've never offered this before, but for what might be a limited time, you can get it in video form, no meeting required. We're calling it our Cash Flow Recovery Program, and we will link it in the show notes below so that you can check it out. But either way, I think it's good information to have to know that it all starts with that number. The bigger the gap, the more opportunity for lowering your taxes and then using those same dollars to build wealth instead and create more tax savings. I always say it's this beautiful snowball effect, but you have to get it started. So that is what our membership at Terra Firma is all about. So I hope you will calculate your cash flow recovery number and then take the next step to learn how we help you make those savings a reality. Thank you so much for being here. We'll see you next time. And until then, go be a wealth maverick.